Hey, welcome everybody to the 40 Finance channel. It's been a little while since I've done a live stream. Kind of crazy time of the year here in spring, entering into summer, but very excited to be here. Hope to see some familiar faces. I know Allie's in here. Good to see you. And just catching up on I don't know, catching up on the negativity and trying to keep a buyer's mentality. If the deal is right during these crazy times, right? And it's not been easy. I've shared multiple portfolio updates over the past month or so you guys know I'm not hiding anything. And it's ugly, but what are you going to do? You're going to sell at the bottom and take your nickels and dimes and go? Or do you wait it out and see what happens? And I guess every stock has a different appeal in terms of the long-term story versus the short-term. But at least here in May, and I've said it many times, here in May, I really do not see a lot of incentive to sell things, right? Unless you need money for an emergency. I just don't feel like selling at a loss right now makes a lot of sense with so much time left in the year. And again, I'm thinking of this from a tax perspective. But that's just my thoughts, and I'm sure other people have different ones. So Allie says it is an important day, and next day everything will drop and crash again. Me Now says, hey buddy. Sorry, allergies are bad today. Looks like everything is going up. We should see some short covering here. And Me Now's not selling either. Just buying, and that's kind of the mindset that I'm in, at least, today. There's a handful of things, everybody's covered it, like you'd have to be living under a rock to not know the things that are pushing down. We know the Fed is one, but internationally, between the China closures, the supply shortages, Ukraine, Russia, like those are pretty heavy topics. And any one of those could see positive news in the future. We don't know for sure, but we could eventually see positivity from those three events, right? And I think if that happens, then it takes some of the weight off. It doesn't take it all. The Fed's going to do what the Fed's going to do. In fact, as I was clicking on to go live, they just released their minutes at 2:09 p.m. Or this is when Seeking Alpha typed it up. By the way, my affiliate link for Seeking Alpha is in the description if you guys are looking for a trial and a discount. Let's just get to the quote. Most participants judge that 50 basis point increases in the target range would likely be appropriate at the next couple of meetings. So that's good because we don't have to worry about watching the next couple of meetings, right? It adds a flare of certainty to it, especially when you have people on TV, Jim Cramer, other people talking about 100 basis points increases. I think that we backed off some of that hype and headline type stuff that's going on the radio and social media. A number of participants said it might be appropriate for FOMC to consider sales of agency-backed mortgage-backed securities once the balance sheet runoff was well underway. So that's in the future, and it goes on to say any program of sales would be announced well in advance, okay? So people are going to focus on that, but we don't need to worry about that today. There was another quote in here. There was some comments about neutral versus aggressive. Let me see if I can find that. I might have read that here on CNBC. Here it is. In addition, FOMC members indicated that a restrictive stance of policy may well become appropriate depending on the evolving economic outlook. So you kind of have neutral versus restrictive, and that's up here. I was reading about this just a second ago. So a neutral stance is neither supportive nor restrictive of growth, which is an important consideration. Obviously, a restrictive is the opposite of that, where we could see the economy fail to grow because of policy. This, of course, would be a lot more concerning. However, let's see. What was the actual point there? May well be appropriate depending. So a lot of X's, a lot of variables may well become appropriate. We'll have to see how that one goes. I'm sort of in line with the 50 basis points. Just keep going and let's just try to knock this thing out. But if it got much more than that, then I would start to be personally a little bit more concerned. So, okay, let's catch up. We've got Allie checked margin debt, and it goes to 700 billion and looks good. People have more cash and margin cash balance. It's a good call. And Bitcoin should be going above 30K, and so the whole market. It's interesting with Bitcoin, and I'm not the expert, but you guys know I do follow it, and I own a very small portion. I feel like the market has went past Bitcoin to the downside. So Bitcoin was going in tandem with the Qs for a long time, and now it's starting to separate. I feel like the Qs are coming down more, and Bitcoin's holding a little more steady in that 29K to 31K range. That would be a good thing, and it could potentially indicate that those people who have sold out of their Bitcoin, the first ones to leave, so to speak, perhaps are done. And the more long-term holders that we have, the more stability we can expect with those prices. There's a lot of other channels that cover crypto better than me. I'm mostly only interested in Bitcoin myself. It does look like potentially the era of the smaller coin is coming to an end. At least that's the read that I got from just, following the market but not participating in smaller coins. Me now, we are on the same page as far as I wish CNBC would stop saying how bad the economics are. Dude, it's ridiculous. I can't even watch it anymore. I swear to God, they love it when things go bad. I think they hate markets that are up. They love markets that are bad. And it's just ridiculous. Just the way, it's very obvious that people watch a lot more, I'm guessing, during bear markets, because that is the spin that they are selling. Sorry about the camera there. And I like the Tom Lee guy from Fundstrat. He's sort of a growth stock person or tech or whatever. And they bring him on and rag on him all day long. And he sits and he still shows up. And I love him for it, because all they want to do is point to the charts and say, Tom, you're wrong. What's the problem? Where's the bear? Where's the bull market trend? And he's fairly patient. He's fairly patient to keep coming back. And one day that guy he'll have his day, right? Because we know that across time, we don't know how much time, but generally speaking, the market does go up and to the right. So I hope for Tom Lee's sake, he gets rewarded for his patience. That's all I'll say about that. Apple just turned positive. Bitcoin at 29,000 going to 30K. Tom Lee is good in my book. So if anything else, even if you're not into growth stocks or tech stocks, which is really Tom Lee's kind of thing, give him some credit, man, for coming on the show and just listening to them, pepper him with crap. That I'll give him that. All right, I ran a screener. This is what I put in the description in this video, in case you guys are curious. And I was just kind of goofing around today. I feel like there's a ton of super cheap stocks. And I know when I say cheap, I'm talking about under $20, and theoretically, that doesn't matter, right? Because it's a share of earnings, it's a share of revenue. It doesn't matter what a share price is. But for purposes of entertainment, I think it's fun to look at stocks under 20. And I will be super honest and say most of the stuff I'm buying is still in that QQQ land. I have a couple things like Magnite and something else smaller that I've been chipping away at. Oh, TQQQ, which is down to like $25, $27. So I've been staying more towards the index part of things. I know the Qs aren't exactly an index, but you know where I'm going. However, if I had more money than I do right now, there's some great things here where you can get 100 shares of stock, depending on your cash reserves, and just call it a dart throw, right? And just throw it off to the side and say, yeah, maybe they'll do something, maybe they won't. Obviously, you have stocks like Palantir that get covered like constantly. It doesn't really matter, for this video what the opinion of Palantir is. The point is that for roughly $900, even if you're flip a coin on Palantir, you could throw it into the back of your portfolio for $900, and that's a company that is not going to go bankrupt. Now, will they ever live up to expectations in 3 to 5 years? That's a much harder call, but we know software is getting destroyed, and to me, that's an example of one worth watching. Let's see who else we got. Did I sort this by market cap? Okay. Yeah, market cap. Let's get some views on pricing. May not let me do both of those things at the same time. All right, so I'm going to switch back. I'm going to go market cap. And at the top, now the qualifiers here, by the way, you can see I did United States, the Seeking Alpha Quant rating from hold to strong buy, right? So I didn't just do ones that are supposedly buys. I did basically ones that, the quant and Wall Street is saying, they're not saying sell on it, right? They're not seeing that big of a problem. Last close price, I did take out the penny stocks. I did $3 to $20. It doesn't really matter. I just happened to pick that. And then I wanted to see positive revenue growth forward. Some of this is very, very small, right? So we'll filter through that in a second. Some of it, 1% isn't a ton, but at least it's growing. Same with EPS. And I'm not going to go through all these names, but I will tell you, like Ford, probably not a terrible play for 5 years just on electrification and the fact that when that finally does go mainstream, Ford's going to be right there with everybody else. Tesla has the lead, but let's face it, Ford trucks, Chevy trucks, I know they're different companies, those are American beasts, like the Ford F-150. When that goes electric and everyone slowly over time realizes they have to swap out their gas version for an electric version, say 5 to 7 years from now, I could see Ford doing very well in that regard. Kinder Morgan, I believe this is healthcare, but before I say that, let me just double check. I might be thinking of Kimberly-Clark, actually. Let's see what this one is. Energy infrastructure. I don't know a lot about energy, so I'm going to be careful and just pass on this. But you do have a forward PE of 17 on that. Sirius, no. Let me go down here. Southwestern Energy, Invesco, Dropbox. I'm not a huge Dropbox guy, only because I think the offerings at Google and several other places probably are working against them. Petco Healthcare, I've looked at in the past. I'm off base on it right now. I can't comment either way, but I will tell you as someone who has a pet, a dog that, you know, my wife paid extra for whatever breed it is. I don't even know. Pet insurance is huge. It's huge, and it's very worthwhile at the end of the day. Very unlikely that you go to a pet hospital and pay less than $500 for almost, and that's the simple thing, right? That's the like thorn in the paw, right? And then if you get into surgery and stuff, forget about it. So Petco Health is one that, again, thinking long term, might be worth investigating. It actually has positives. If we go, you can see this little drop down here, quant rating, seeking alpha authors, who are basically people like me, and Wall Street analysts. You got greens across the board on that one. So there could be something to look at there. Let me press my phone here for whatever reason it's going off. Sorry, and that was Petco. There's another all green, Comstock Resources, I don't know. Eli, Callaway Golf. The interesting thing here that I noticed about Callaway Golf is that out in California, so I'm on their newsletter because we have, what's it called? Oh, I'm going to forget the name of the golf place where you hit the balls, but who cares? You guys know what I'm talking about. They are adding like par 3 9-hole courses to some of they already added one. It's Top Golf. They already added one out in California. They sent a picture of it in an email. And if they, if they keep doing that, these are going to be massive facilities. And that's just a portion of what's going on at Callaway. All right. I don't golf myself. Outside of, joining some friends every blue moon. But that's something to watch with Callaway, especially if people keep going bearish on consumer discretionary, because I would say the upcoming quarters, which would essentially be Q2 and Q3, are going to be peak season. Because if you live in Ohio like I do, your Top Golf experience is probably limited realistically to late March into maybe Thanksgiving. Before, at least for a guy with kids, I'm not taking my kids out there in December when it's blowing wind and stuff like that. Wendy's, follow your Wendy's news. They just had something come up, 1784. So takeover target of Wendy's. I don't want to speculate on this. I don't know enough about it. But there could be some reasons to get in Wendy's. You just have to follow your own charts on that one. Who else is down here? Sabra Health. Well, let's first go here to the greens. First Bancorp. So this is just a bank, but you got all green scores for that. You have Alliance Resources Partners. I think that's in the energy space. 1968. Let's just make sure that's energy. Yeah, natural resource company. So coal, it's interesting. I caught this coal little segment here because for whatever reason, I'm guessing because of the price of gas and the Russian freeze on natural gas, coal is not only is the price going up, but less established countries are looking at coal as an affordable way to work around this inflation. So whether you like coal or not, I don't think anybody really likes coal from an environment perspective, but it doesn't matter. If you're out of money and you got to heat a country, coal is going to come into play. All right. Who else is on here that I recognize? Retail Opportunity, that's probably a REIT. Primo Water, this stock has been a cheap stock for a long time. If you're worried about, getting back to environmental concerns, this could be one to look at for a long-term prospect. EXP, this is basically a discount retail brokerage. It's a very interesting company. Very interesting company as far as if you take your Century 21s and your HERs and Coldwell Bankers, they're kind of disrupting that world in a more traditional sense. So different than Zillow, which I own Zillow, and different than the kind of cash for houses. I'm trying to think some of these other companies out here that are doing different things in real estate. EXPI is just changing the real estate brokerage service model, and they're including real estate agents. It wouldn't surprise me, despite where the housing crisis, whatever you want to call it, is, prices going down. If these guys continue to grow, because it's not price sensitive in the sense that they only have to attract more agents to grow their business. And there's a certain amount of houses that are just going to be sold every year regardless. So I would say keep an eye on that, particularly at $13. And it is profitable, okay? Not by much, 57 cents. We do need to worry about profits in the near future, but it's an interesting one in my opinion. Urban Outfitters, I don't know enough about that, and frankly, retail's just getting crushed right now. What else do we have? Dreamfinder Homes, I believe this is the real estate firm that buys them and rents them out. My phone's going crazy. This is another one that while the real estate world is kind of coming down, you might find a deal here. You just need to read about it and make sure you know what you're doing. It looks like it was as high as $31.89, but if probably their portfolio of homes is losing intrinsic value, but it wouldn't surprise me if we see their revenue go up because they're probably increasing their rents. Just my guess. Magnite is one of mine. You guys have heard me talk about it. This is basically connected TV ad inventory management. I'm really excited about it. There is a catch with Magnite. I'm all in on it, and this is one that I do add a few shares here and there under $10. The catch is they're in this digital advertising sector that's getting absolutely destroyed after Snapchat. This has nothing to do with Snapchat, okay? It couldn't be further from Snapchat. This is about connected TV. The most important thing right now for Magnite, they have a deal where they've been managing Disney's ad inventory, aka, the Hulu Plus and the whatever, and you have Disney ad supported coming out, Disney Plus ad supported. I'm hoping that Magnite gets that contract along with an extension. And I think that if that were to happen, it'd be very, very good news for the stock. And then on the flip side, with Netflix entertaining the idea of ad-supported TV, I don't know if Magnite could get that contract. There's nothing's been written that suggests that. However, the shift in Netflix behavior or standards could open the door for a lot more contracts for Magnite. That's what I'm banking on. I like it, particularly at this price. You got a small EPS. You do have a company that has spent a lot of money on acquisition, though, so I don't want to paint the pure rosy picture on it. But under $10, I would buy it all day long. In fact, I am. All right. Let's see here. New Mountain Finance. I'm just looking for big names that I'm familiar with. GoPro, I don't see a lot there. Great Lakes Dredge and Dock. Some interesting ones. There's Funko. Always entertaining to look at Funko. I got a few Funkos myself. But anyway, is this Aaron's Rental Company? So this could be interesting in an actual recession. Haven't looked at this company in a while, but this is where you go to rent, TVs, furniture, etc. And if indeed inflation crimps into people from that standpoint of furnishing a house, well, rentals could do conceivably better. So maybe something to watch there. All right. I know there's a few questions on here, so I'm going to take a break and go do that. Let me just adjust this really quickly. Let's see. All right. So, TG's here. Check out PL, new contract offer, huge TAM. Chat, if you don't own BABA, buy 1 or 2 shares. So me now, I'm with you on that. I have KWeb that I bought into maybe 2 or 3 months ago. KWeb's another cheap one in the ETF space. 1 second here. That if you're interested at all in ETFs, it holds mostly Alibaba, I believe. Take a look if we can get some holdings. Right here. Top 10 holdings. Tencent, Alibaba, JD, Meituan, Baidu, Trip.com. So all of these have been, absolutely crushed in the sort of Chinese accounting scandal, on top of, I don't know if it's a scandal, by the way. It's more like Americans sounding the alarm on it. And that's on top of COVID closures, which would obviously hurt any of these companies. Now, what's cool about KWeb, and one of the reasons that I bought into this one, besides the bearish sentiment hanging over it, is the fact that they do not own ADRs. They own actual shares. So you see how it says Alibaba ordinary shares? So Shanghai listed shares. That takes out some of the risk of what may or may not happen in America. But obviously, if you lose the American investor, you're probably losing a decent chunk of investment. But this is a relatively inexpensive way to get your piece of Alibaba, as well as, conceivably other countries or other stocks that will do well if China does, bounce back in any way. So that's KWeb. All right. Let's see what else is going on in the news here. So we have, you got the Abbott Labs baby formula thing. I don't know if there's an easy way to play that, to be honest. Whenever you're out of something, similar to oil stocks right now, it's just, you could buy in another company, but then when the shortage goes away, and I think this is the risk for companies like Exxon, when the shortage eventually goes away, then the stocks go down. And it happens so quickly. So if you're trading in oil stocks, which I am not, I would just encourage you to keep your finger on the trigger in case it becomes time to sell. It doesn't appear that will be tomorrow or anything like that, but you could see potentially after Labor Day, when the travel season starts to wind down, you could see oil prices, I don't think they collapse, but they go down, and every day they go down, you're going to see some pain in that. What else do we have? SEC proposes rules to crack down on ESG funds marketing. I don't know what. Oh, this is the environmental. Okay. It's not really, I never really invest, solely on ESG. So it doesn't really come into play for me. But it's good that, it's basically like a nutrition label that they're doing here, so that you can't just say something is, environmentally conscious, a fund is ESG when in fact it's not. So I would support that without knowing all the details. What else do we got? John Deere raises dividends. We have Simon Property not planning to make the Kohl's bid. That's probably a good thing if you're in Simon Property. You don't want to be, you don't want to be operating stores when you're already operating the real estate. There's a reason those two worlds are disconnected. So I would say that that's good. Good news anyway. Microsoft dips even as Meta Platforms picks Azure. So that's kind of interesting. Facebook will expand how much it uses Azure's supercomputing power in order to accelerate its AI research. To do so, and then it gets into the tech details, blah, 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 blah. Last month, Microsoft and Azure saw revenue rise 46% year over year. I would imagine that getting even just an expansion of the Facebook contract would be good for Microsoft. And Microsoft today at 263. Most recent high looks like 342. All right. There he is. There's Lion. All right. Good to see you, friend. Planet Labs, PL. Okay, I'll take a look. PBC. So I don't know where that is. San Francisco. Designs, constructs satellites with the antenna providing high-speed data delivered to customers through online platform. The company offers blah, blah, blah. Okay, so I'm guessing it serves agriculture, mapping, forestry, finance, and insurance. So some sort of satellite data company that offers mapping technology and critical processing and harmonizing of images. So there you go. Those of you interested in PBC at 571. Looks like that one had a high back in November at 1141. The poster's saying, that supposedly they have a contract coming out. I do not know that. Stop the recession, says Lion. I'm 100% in equity. I bought one share of Amazon, and that was it. We are full bore equity. I'm essentially close to that. Because I have a family, I have to have that emergency don't touch it fund, which is always tempting to dig into. But, so it's really comforting to know that you've got a few months worth of, what's it called, revenue or living expenses on tap. So I really stay away from that. But from an investing standpoint, the well is dry. In terms of dry powder that I've allocated specifically for investing, it's all in stocks. And the sad part is that things went down further after I ran out of money, which was probably late April. I can't remember when my last purchases were. Now, that being said, some of those things that I was putting up on the board earlier, when I said, Magnite under $10, I'll pick off literally like $20, $40 worth here and there. TQQQ at 27-ish, I'll pick off one or two shares on there. Literally lunch money, right? And I'm okay doing that, but I'm in a similar boat to Lion. Jaden says, how much do I need to start investing? I'm very little, depending on where you go. I would just, in this environment, I would stick to an index fund, I think is your safest play till we sort this world out. And let's see how much the SPY costs today. So this is $398. If you can pick any amount, you can pick one share of that. But I know that there are numerous brokers that offer fractional shares. So you can even take this $398. If it's the last $398 that you have, you probably shouldn't be investing it right now. But if it is the last $398 you have to start investing and you don't care if it disappears, and you do fractional shares, you can just roll out whatever, $100 a week for 4 weeks, right? And try to catch hopefully a rebound in the market. But you don't need that much money. It's more about consistency, and it's more about, the time that you can leave that money alone more than anything. All right, steals in Facebook, PayPal, Amazon, Apple, Google, yeah. Buy and forget it, look back in 2 years, exactly. I'm on that train as well. Did Papa Pal speak? Yes. Lion, we were looking at that earlier. The short version is 50 basis points for the next few meetings was the consensus. So hopefully CNBC can shut up about that now and stop talking about the prospect for 1,000 basis points increases. 50 next few meetings, possibility later in the year that they have to be more restrictive, is how they worded it, in their policy, as opposed to aiming for neutral. So we'll see. It sounds like, excuse me, it sounds like we got some time. And don't forget, at least here in America, I said it earlier about one of the consumers, about Eli, Topgolf. This is a huge spending season in America, even in times of restrictions, right? And we've had a lot of COVID restrictions, and we're heading into some financial restrictions. But Memorial Day through Labor Day, that's peak America. That's peak American spending, say beyond maybe holiday shopping. So when you think about travel, when you think about groceries and food and cookouts and road trips and rentals and things like that, it's peak America that we got coming up now. So we just ended earnings season, and I know we got NVIDIA left here today, and somebody else relatively notable, I can't think of who it is now, but this earnings season that they're talking about now is for the past Q1. So they're talking about the results from January through March. And obviously they speculate ahead to the future. The future that I think may be underestimated is the summer season for companies that are in any sort of travel leisure. This is going to be a huge summer for them. We'll take a look at something here. First, I want to just check that earnings to see earnings calendar. See who's coming out today. Pre-market. Here's your post-market. Universal, Williams-Sonoma, Splunk, Box, Zuora, Snowflake, NVIDIA we talked about, Elf Beauty, Build-A-Bear. Oh, that's pre-market tomorrow. So there's some decent names in there. Elf Beauty, when you think about cosmetics, in the sense that I believe, I don't wear cosmetics, but I would say that this is in the bargain category of that group. So it'll be interesting to see how their sales are doing. NVIDIA, obviously important. Snowflake's been beaten up a lot lately. Can they bounce back? Zuora, I believe this one is online subscription services. I'm not going to speculate. Let me see here. Cloud-based software on a subscription that enables companies in various industries to launch and transform into subscription business. So basically building a subscription website, except at a much larger scale. That will be interesting because you got to figure there's not a ton of new companies coming up, but what do I know? Williams-Sonoma, expensive, premium luxury type goods for the kitchen. That could be interesting how they see their consumer going forward. It's tough to tell from that. So, and then the other thing, while we were talking about What were we talking about? Travel. It's always good to look up the TSA pre-check numbers, if I can find them. Stats. Here we go. Uh-oh. Did I get rid of that thing? Try it one more time. TSA volume. Yeah, same thing. Oh, there we go. Wasn't loading for some reason. Okay, so where are we at this year? As today is 25, so this was yesterday. Let's just go back couple days, make sure it's fully counted. 2.3 million people through the TSA travel checkpoint across America, I believe. This has nothing to do with international. In 2019, you were 2.5 million. So what is that? You know, give or take 90-ish%. Last year at this time, 1.7. In 2020, obviously nobody was doing it. So they definitely added somewhere in the neighborhood, if I can count that on the top of my head, just shy of plus 50%. I'm going to say plus 40% without using a calculator. So that's pretty strong. And actually, this one's interesting. 2.3 million versus 2 million. They actually eclipsed it on the travel side. Here you were close. See if they eclipsed it on any other day just by eyeballing this. Doesn't look like it. But anyway, you had one date. That's pretty substantial right there. You did have one date that eclipsed it. So when you think of companies like Visa, potentially Disney, potentially a hotel company, potentially Uber, right? You are talking about more travelers on this one day than we had in 2019. Again, we're in peak America time right now. You will not get the earnings for April through June until late July and August. So I get the doom and gloom, but the best is yet to come, in my opinion, in terms of measuring where 2022 is really at. All right. Let's say you bought DraftKings at 34. That's almost right where I am. Now it's down to 14. Same amount of shares. My book value was 4,000. Not its 1,400. The merger lowered it. Did I lose money? I don't know. That is very odd. I know that mine has not changed at all. So I don't know if you had special type of shares that came out early, because that has not happened to my shares. I bought my shares around $33, I think. And the value was 4,000, and now it's 1,400. So I can look quickly using the Seeking Alpha tracker, which updates after the market close, but it'll give us a good idea where I am. Where are we at? There's DraftKings right at the very top. So price of 14, I paid $33, and I have to expand this, it looks like. And I can't scroll over. Okay, well, my value today is 3,249, but I paid, I'm at 230 shares. Now I have to get out the calculator. 230 times 33, I paid $75.90, and today's value is 3,247. So it is more than 50%. This number here looks correct. So does this number. Total change of minus 4,300 aligns with, minus, and pretend that this is a positive, right? So this plus this should equal share cost of 33.11 across 230 shares, and it looks like it does. So I'm not sure what happened on yours. I wish I could help. It just doesn't add up. It's just very different than mine. Let's wake up tomorrow and your cost basis drops to 14. I would say that that's good. To me though, it'd be a little concerning on how it happened. But yeah, if they're saying you only paid $14, I guess you got to go back. If you want to go down a rabbit hole, Lion, then I would probably go back to your transaction history and your brokerage and see what exactly you paid for it, right? So instead of speculating off of a graph, like particularly this one, which is just connected to my Ally account, but I'd go back in transaction history, type in, the symbol to show all transactions that include DKNG, and see what your actual outlay is. Because there's no lies or no weirdness there, right? That's how much they paid. That's how much you paid the brokerage. And then go back and see what the valuation is on your main screen, and that'll probably give you an idea. And the DK merger last week, even our last month. So you're probably talking about Golden Nugget, right? So last month, okay. Golden Nugget closing. Why did their stock go up? And why is there a picture of Domino's? Golden Nugget merger is set to close. Merger between the companies is even closer. NASDAQ delisting notice went on Monday and indicated that DNOG shares are expected to be delisted on Wednesday with the close of the sale to DraftKings. Under the term, GNOG shares receive 0.365 shares of DraftKings stock for each share of GNOG. By the way, I think this is a mistype. I think GNOG shares are expected to be delisted, and then you get 0.365 shares of DraftKings stock. Did you have Golden Nuggets? Did you have Golden Nugget stock? Because that's the only way I could see how this would happen. At least the way I understand it here in America, nothing has changed with my DraftKings stock. So if I had Golden Nugget, I would expect this to turn into this at the ratio of 0.365 shares, but I would not expect anything to have happened to my DraftKings stock. I think, Lion, it's probably worth your time to call your broker. And when I say broker, like I'm with Ally, it's not like I have like my own personal guy, at the other line, but they got like a 1-800 something number, and I'd have them review your statement unless it's an error in your favor. That's what you got to get to the bottom of, because if it's an error in your favor, you'd have to consider potentially selling it and just get out of it, and then you can always buy back in, but hard for me to say. It looks better, yeah. If it's an error in your favor, dude, we all deserve a little luck sometimes, right? And it's been, let's see when this is dated. This is dated May 2nd. And then Wednesday, what's the closest Wednesday to May 2nd? That would have been May 4th. So you're almost 30 days in. You'd have to think about it and just see what happens. I guarantee you, though, that in the fine print somewhere, there's some stupid thing that says if they screw up, they can come back and fix it and ask for their money back. The brokerage, that is. Just so, trade carefully, I guess. Have you looked at your Ally broker? No changes in Ally. No changes in Ally. I know I'm not showing you that screen, and I don't really like to show that screen with my account number and stuff on it. I got to take an extra second and blur stuff out. So I can't look at it right now, but I'll take a look, and I'm happy to send you like a picture of what mine. You and I have emailed before, so just if you still want to see what mine looks like, just send me an email and I'll take like a screenshot, but I know it's still DKNG in my world. And that should be yours too. There's a side of me that thinks like, what if they screwed up and took your DraftKings and then gave you 0.3 DraftKings? Like that would suck. That's where the part about go through your actual like transactions, you know, however many, it probably was 2021, I'm guessing, since you're at the same price as me. And just go back to those transactions. And in Ally, you can sort by ticker symbol. So there's a lot of crap in there to sort through, but if you just put in DKNG, you should be able to filter it out. All right. All right, guys, that's about it for me today. It was good to come back live and see some familiar faces. Hope you guys are hanging in there. Nothing has changed. I'm not blowing smoke at you at all. I am still 100% in the market. I'm still buying Qs and TQs and other little bits here and there, but I do have a limited amount of investing dollars right now. So I have some things to think about, and I made a video today on how I'm kind of approaching that if the circumstances hit, you know, some little placeholders that I'd set up. So I'm going to edit that video, and it'll probably be out later tonight, but hope everybody's doing well. Chess Dad just got here. Green Day is a good day, absolutely for sure. Unfortunately, Chess Dad, I'm happy to see you, but I'm also packing up, nothing personal. But anyway, guys, hope you're doing well. I'm going through, I don't know if I've said this before, but the reason stuff's so scattershot right now on my channel is because it's baseball season, and I have a son who plays in high school, and then I actually manage a 9U select team for my other son. So I'm doing like a lot of baseball, like every day something's baseball. So I've had to pull back on some videos that I do, but I'm still in, I'm still me, I'm still doing my thing. Nothing's really changed. I'm not hiding from the haters or anything like that. It's just, I'm enjoying the season. It's good to get outside and good to participate in things like that. So I'm having a blast, and it actually has been a good distraction with as crappy as the market's been. But I'll be back. We're done with high school season. 9U season will go on for a little bit, but I should have some more time here in the next couple weeks. So I'll be chatting here soon again. But take care, everybody, and I will see you soon.